Hey traders, good weekend and wonderful weekend. Vladimir here, and this is the weekly forecast 24 of January 2016. Last week was extremely interesting, was a lot of moves, and basically it seems, as I've predicted during the annual forecast, that this year is going to be very interesting with a lot of opportunities. So far the moves are serious, the moves are heavy, and as I can see right now, they are here to stay, and there will be more, of course. Maybe not all the time it will be that active, but things are getting interesting, and we should be able to see some great opportunities. And some of these opportunities we already face, we already see, and we already experience. And let's cover the charts that we will be very likely dealing with this week, so we might try to enjoy them. The first one is Mr. Dollar Canadian chart. I've been talking about not once, not twice, many times. So quickly reminder, we are on a big triple cycle on this one. We are on sorry, not this, we are on a cycle on this one, and we are on the last cycle on this one. Okay, all of them lead us to the same place of action. Okay, so we've been talking about this place a lot, and it seems that now we finally reached this area of a potential sell. Last week ended up finally with huge engulfing, which I love most because it's also a kicker. Okay, it started with the gap and falls broke the last candle, and that's a really good sign. Consider to that with that we have a divergence here from extreme to extreme, which is strong again, and you understand the bearish pressure starts to be very serious. Now on a daily chart, looking on the last cycle, we might be dealing with some kind of mirrored cycle as well. Mirrored means this one, this angle, and this angle should remind each other pretty much, so something like that. Okay, I'm sorry for these lines, but you got my point here, right? It should be something like that. Okay, that means we slowly should start and see a down move. Now all that is relevant once again as long as the last stop holds. This is the most important thing here. Dropping down, let's shorten the adventure of the explanation here. This is a bearish convergence, which means after we find the bottom, two waves up, and we should see the continuation down, and that's the way to treat that for this week. Dropping down to 1 hour chart, we can see that this pair currently creating a triple cycle. This cycle should end approximately around 140.50. That might be a bit higher, that might be a bit lower, but that's very likely where we will face the bottom. Now from there we very likely will get some kind of false break below this line, divergence taking place, and from here two waves up again, back to 142.50 up to 143 plus. Could that be a bit higher? Of course, but this would be our area. We will be looking for a bearish divergence to be created that will provide us the next continuation sell. And if we take a look on the view of daily charts, okay, there is a gap that still was not closed, and this gap is right here. This is 138 area. Now if we remember the double cycles from weekly and put some Fibonacci's on it, now the first cycle, which is here, it's 38.2. Oh, sorry, it's from here. It's 38.2. It's slightly lower than 138. And the big cycle, of course, starting from here, its 38.2 is even lower. That's the 131 area, which I believe, actually I believe we are going to something like 128 or so. On longer view, of course, it's going to take time, but this is basically what it is about. So that's how we're going to move. Two waves pullbacks or triple cycle here up, and we should be looking for a sell. All my sell referred, of course, to this high. As long as this high holds, that's how long we can look for sell opportunities. Euro Canadian pretty much follows the same story. Now I want to separate that because on monthly chart, according to the monthly chart, we might be able to get this cycle duplicated, which means 164 area. Again, slightly higher, slightly lower, that's acceptable. That means that for the longer run, we could be looking for dips to go for a buy. On a weekly time frames though, with combining with the daily cycles, we have these two cycles separately. Now check this out. If we take a look on this cycle, then we can see that the 61.8 here play an important role. It's right now false breaking it. Now if we add to the next cycle, guess where it's going to stop? 61.8 as well. Now this turned to be a monster area here. Okay, we went above it but followed the divergence and extreme false break, and that's where we go here. So basically from here, very likely we are going for something like that, to below this bottom, maybe even lower, back to the trend line, which after we might try longs. Until then, short is on, and that's what we better dealing with. On the day, on the 1 hour chart, we are now currently dealing with the same idea of triple cycle. Okay, the divergence is coming here. So once we have that and we start to create false breaks, divergence completes, and we could be looking for some longs here before taking one more shot, dropping down. The principle of mirror should be applied here as well, and this principle means this cycle, that's how it should be reacting. So that's another great opportunity. And the last one is the pound Canadian, which we follow, of course. Well, you remember this one. And I expect it to go lower, much lower. And below 2, below 198 even actually. This is a very nice bearish convergence here created on a daily chart. That's series call. Rallies should be sold. And we might be looking all the way down back to this beautiful trend line. Okay, very interesting one to follow, dropping down to lower time frames like the 4 hour chart or the 1 hour chart. We can see we are here creating boom, boom, potentially something like that, tick tick, 2 waves up, again something like 203 maybe or so, and drop for continuation. This is the new trend line to follow. We get closer, 2 waves up, that's opportunity to look for a sell. While it holds, we remain in a bearish view. That's the 2 wave cycle we had been through, and that's what could actually take us to the 2 waves down back to here, and that's 188 on the longer view. Now there is a question, could that turn to be just a range? First of all, the answer is yes, because we already had one false break, which brings our top to here. We already had one false break to the bottom, which brings our bottom here. So we could see something like a visit on the bottom and again a rally here. That's a possibility, but still, that means we are going to this place first of all, and this is very acceptable for us, because that means there are several hundred points still to go with. That's all the Canadian pairs. Now New Zealandian Canadian and Aussie Canadian, you remember my view from annual forecast, you know what I think about that, right? Same story basically. 2 waves down, which are very likely about to be completed very soon, and we can look for potential reaction up. After that we will see if the market is ready for new highs or is it ready for one more drop down after that. So far this is the plan for a potential buy. No divergence yet, but it might be bullish hidden one. But once this double cycle completes, we will have to stop and see if we have any signs for a buy. Okay. Same with Aussie Canadian, which is This is the one we've been waiting for. You know that, okay? And that's the trend line which we can be waiting for. So all the ways Y to long once it comes after that. The next one is going to be pound dollar, which is a monster reaction from the bottoms. The biggest question is that enough for a bottom? Now, watching on a 4-hour chart, we did get for the first time a bullish convergence, and that came after the divergence. Of course, there is a beautiful trend line that was broken, very likely to be respected and very likely to provide us 2 waves up rally towards 145, 146 zone. From there, if we really reach that, we will have to stop and see if we are ready for another sell, another bottoms. According to weekly chart, if this one really will take place, which it might because there is no divergence preventing that, we are going for the continuation of the year towards 133 zone. Is that possible? Yes. Will that happen? We'll have to stop and follow. Now currently we will be dealing with potential buys. We had 2 waves up creating this stuff. We need 2 waves down, ideally to below this bottom, to try the longs towards 145, 146 ish, and that will be our risk approximately. That will be our potential profit. It should be worth it. All the bullish plan is relevant as long as this bottom holds. Next one is going to be the euro dollar, which I just want to say I am not quite sure about what it's going to do. Basically, it's acting like a double-double here. Okay, so it could create, this is the first one, second, and it could do this. If that's the scenario it does, and it holds the last bottom, euro dollar might find this bottom and start the rally again, completing 2 waves up towards 110, 112 zone, maybe even higher, before the sell taking place. But currently, I think it's just best and safest to avoid it. Watch out for the scenario I said, watch out for the trend line I said. Okay, here that's the alternative. Break above it and we might start to look for longs again. All that is relevant as long as last bottom holds. The next one on the list, euro pound. Euro pound is extremely interesting. Why? Because according to the weekly time frame, this is a bullish convergence, which means with drops down we might be trying for a buys. 1, 2, 3, 4, basically. Dropping down to the daily chart, these 2 cycles created the false break which was completed last week, and that's a great time now to start and look for potential builds for a sell. This is a bearish convergence, dropping down to 1-hour chart, and we should be looking for a potential cycle to be completed, something like that. If and when it's done, 2 waves up, and we could be looking for another sell that will take us to here. That's 0.73 or slightly lower before we will start to rebuild the longs for one more time. So once we do get the bottom, start to look for two waves rallies to complete itself before one more sell to taking place. Pound yen is another very interesting pair, which I like the opportunity. The bounce is a monster from 161 expansion of this. Really great, as it's also come before this, below this bottom. I'm still bearish for long run, but on short run, that means from my point of view, we are ready for a rally. And here is why, because the last bottom was a special cycle. From here we should get 2 waves up before we reconsider the sell with the trend line. Dropping down to the 4-hour chart, we can see that this pair provided on Friday very nice convergence. Idea same, 2 waves down, ideally back to trend line, back to the 20 MA, maybe the trend line as well, and we might be trying the longs. The longs should take us towards 173, 174 zone before we'll have to stop for a second and see what's coming next. Next one on the list would be Aussie dollar. Aussie dollar from one side is very tricky, okay, because this divergence is, well, it's here and it's serious, but MACD is still not ticking up. But this is a false break and we have to give it the respect, especially since the 4-hour chart created a convergence here. Now it's moving a bit tricky, that's true, but if we get 2 waves down, and as long as this trend line will hold, 2 waves down, that's what we need, we might be looking for a potential buy. We might remember that on the daily chart we are still on a ranging cycle, which means there is a very big chance we will be starting slowly moving to the top of it before any bearish continuing divergence will take place and take us to new bottoms. That's something to watch for. New Zealand dollar, well, also a tricky one, but from my point of view there's also a chance we will be dealing with a rally. Here is why. 4-hour chart bullish convergence for the first time. On the 1-hour chart it is moving according to the potential double. It was the first double up. That is a triple, which might do this and another push down. This push down might be the one that will take us after that for one more rally towards 0.66 or around it, which after we could be looking for a sell, aiming new bottoms. Canadian yen is my next opportunity. This pair did exactly what we wanted. Below 80 is a buy opportunity. The monster reaction is just on its beginning, very likely, and this bullish convergence should provide us some kind of drop and a buy opportunity, very likely back to these highs. So there is much more to go on this cycle, and remember, this is very likely triple cycle, which means we are going to above 38, very likely towards 50, and that brings us back to 92 area approximately. Of course things could change. This is still sensitive market and still sensitive place for the Canadian with the oil and everything, but that's something to pay attention to. It looks great and behaves great, and it's very interesting opportunity. Aussie yen, that's the same. Triple cycle is over. Divergence ticked up. As long as last bottom holds, I will be trying longs. Triple cycle means we might be dealing with the 50, which means we should go to above 90 as long as the last bottom holds. Once again, it's very important to remember. This is equal tails candle pattern that I very love and respect, especially when it comes at the end of a cycle or end of correction. That was the last time it appeared, was way bearish. We all remember what happened right after that. Dropping down to 4-hour chart, we can feel another convergence. In other words, dropping down to 1-hour chart, and we can summarize, if we get 2 waves down, maybe back to the trend line, maybe slightly lower, and we should be looking for potential buy opportunities, aiming to the levels mentioned. First thing to do would be, of course, if that would be the first wave, that would be our first area to cash and look to move stop losses to break even. The next one on the list is going to be Mr. Oil. Oil is bouncing, and it's bouncing pretty seriously. On a weekly chart, that's a very massive candle pattern. Okay? Ideally, we still have to get the false break of this trend line. MACD is getting ready for a divergence, ticking up. That means we might be looking already for potential buy opportunities. Oil has provided us great convergence. If we get luckily, right, drop down back to this bank zone area. This is first bank zone area here. Actually, let's put some levels here. It will be much easier. This is level number 1. This is zone number 2. Two zones, 1 two. You need two waves down to any of them to try the longs. From my point of view, we are going to here first of all. It's going to make something like that. Okay, and for me, that's a very nice opportunity level, a reason to try the longs. Everyone was expecting the oil to create 20 or lower, while Iran is back to the oil market. And so far, oil does exactly the opposite. Why? There are rumors that countries like Venezuela and Saudi Arabia and few others will be looking for an emergency meetings just to make sure the prices don't fall further. Look to long. As long as last bottom holds, of course. S&P, tricky, but we are looking for the correction, right? Makes sense, especially after the last huge drop took place. I am not confident that this is over, but I do think that if we break above here and create a convergence, we might be looking for two waves down for a potential two waves up retrace after that, and then new sell for new bottoms. So that would be all as for now, and I think that's much more than enough. We have a lot of opportunities, and just pay close attention to that, my friend, and let's see what the market provides us and how we can enjoy from that. Thank you very much for your time watching this video. I wish you a wonderful week, great trading. I'll see you with the daily forecasts. Yours, Vladimir.